Ian Burrell, and I'm here with Sam Beard, and we're going to talk to you guys about blockchains and stablecoins. So I'm sure everybody here is familiar with Ethereum and Bitcoin. These are cryptocurrencies that are built on blockchains. But what is a blockchain? A blockchain gets its name from how it's actually constructed. Data is stored in blocks, and they're linked together to form a chain of information. Blockchains are difficult or impossible to forge or change. They're also used as part of distributed ledger technology, where all the blockchains are stored on multiple nodes. They're secured through cryptography, which also helps make them hard to forge. And each block on the blockchain has a cryptographic hash of the previous block in the network, so that you can validate that each node is correctly attached. So I want to tell you guys a little bit about some properties of distributed ledger technology. The first is it's programmable. This is done through smart contracts. Talk a little bit about that later. They're distributed. When you look at Ethereum and Bitcoin, there's thousands of nodes in the network. They're secure. This is done through cryptography. They're immutable. And this is one of the most important properties. When you look at standard databases, such as like MySQL or Oracle, let's say here Sam has got 1 Bitcoin in a database. I can just run a simple update query to change that to half a Bitcoin or 10 Bitcoins. Organizations typically protect against this through access control and audit logs. But when you're in a distributed system, you do not have that. So making sure that nobody can modify the data once it's written is really important. They're also anonymous. Everything is done through public and private keys. If you want to be able to send a transaction, you have to sign it with your private key, and data gets sent to your public key. They're becoming more and more pseudo-anonymous with the tech companies such as TRM Labs, Chain Analysis, doing analysis on where crypto is going to and from on different wallet addresses, as well as people having CIP and KYC when you sign up to user services. That's know your customer and a customer identification process. They're unanimous. Every node on a blockchain network will have a full copy of the blockchain, and every block is time-stamped. So how does a transaction get added to the blockchain? First, a transaction is created, and then it is sent out to the network. A block is created for this. It's distributed to the nodes. It is validated. Somebody will get a mining reward and be able to add this block to the blockchain. That is actually sent back out to all the nodes in the network, and the transaction is completed. So I'm going to talk a little bit more about some kind of key concepts in blockchains. The first one is there are layer 1 and layer 2 blockchains. Layer 1s are what we're most familiar with, which are Bitcoin, Ethereum, Solana, Cardano. Each one of these has different consensus protocols, gas fees, different number of transactions per second, number of nodes in the network. And so depending on what you're looking to do, you can pick a different blockchain based on, if you want to hold and do things, that's maybe Bitcoin. If you want to do a lot of things with smart contracts, maybe it's Ethereum. Payments is probably Solana. And Ethereum has really popularized layer 2s. And what a layer 2 is a way of changing maybe some of the base properties of the layer 1 through either cost or speeding up the network. Ethereum has optimistic as well as zero knowledge layer 2s, and they all ultimately rely on the security model of the underlying layer 1. We're going to talk a little bit about consensus protocols. So the first is proof of work. This came around with Bitcoin. Computers have to solve a very intensive math problem to be able to mine the next block. In Bitcoin, there are data centers upon data centers of computers just sitting there mining. I recently looked up how much energy Bitcoin was used in 2025, and it was about 125 terawatts of energy. That's more than Argentina or Netherlands used last year. So the amount of energy being consumed by the Bitcoin network is just massive. And when this was happening, other cryptocurrencies such as Ethereum said, this may not scale, and this is probably not going to work for all cryptocurrencies to be that energy intensive. So they came up with a concept of proof of stake. This is where you will put a certain amount of your cryptocurrency on a node, and based on the percentage of the cryptocurrency you have the opportunity to mine the next block. and you will get a reward for that. And if you're acting in a way that is not conducive to the network, you're on the risk of getting your cryptocurrency slashed. Therefore, you will not do that because you could be losing tens or hundreds of thousands of dollars. So it's a way of ensuring correct behavior on the network. So where do you store your cryptocurrency? We have custodial wallets and non-custodial wallets. So custodial wallet is great example is PayPal. One of the benefits for this is you just have an application, username and password, and you can log in. PayPal will manage your public and private keys for you. And they give you the ability to buy, sell, transfer cryptocurrency. And if you forget your password, you can go through like an MFA process to re-get this. There's also a concept in crypto, which is not your keys, not your crypto. We've seen this problems with this with Celsius and FTX when they've collapsed, and to get your crypto back, there's been some painful processes in bankruptcy court. And so you have the option of using non-custodial wallets. You have to manage your own public and private keys. You usually get like a sheet with like 20 words on it. If you need to reconstitute your private key, somebody else gets that. They can get your private key and get access to your crypto. You lose your private key, you lose your crypto. There was a great story last year where somebody realized he had about $800 million of Bitcoin on a hard drive that he threw away, and he tried to convince a city to let him excavate the dump to be able to get the hard drive. And he was like, hey, if I can get it, I'll give you guys half the money of the crypto. The city didn't believe that it was there. He would be able to find it, and if he could find it, that he would be able to get the crypto off the hard drive. So $800 million of crypto has been lost because somebody lost the private key. This is not the only time something like this has happened. So you have to figure out what is your risk reward profile for some of these and decide what is the right way of storing it. Some great non-custodial wallets are MetaMask, Phantom, and Ledger. So I'm going to talk a little bit about smart contracts. These are applications that you can write that will run and be executed on the blockchain. Solana uses Rust, Ethereum uses Solidity, and they can be executed depending on some different events happening or an oracle calling them. A good example of an application you could write would be, I want to bet Sam 10 PYUSD that the 49ers are going to beat the Raiders. He thinks the Raiders are going to win, so we put this money into a smart contract. An oracle calls it, the 49ers win, I get the 20 PYUSD. Sounds a little sad, I'm a little happy, but it all works out in the end. I just wanted to win in the example. But let's talk a little bit about Web3. So when we look at Web 1.0, it was just reading. You had AOL and you have Yahoo, where you can just read content. In Web 2.0, you have Instagram and Facebook, where you're actually writing, and companies have made billions and billions of dollars off of users' data and being able to sell this to marketers. In Web 3.0, it's all about decentralized and digital ownership, where you own your own data. There's some really interesting applications out there, from DeFi, identity and auth, NFTs, data, and file storage. This is an example of a smart contract. What they are is a DApp, which is written on blockchain using a blockchain network, using Web3 JavaScript libraries. Very similar example to what I said, except this is people using smart contracts to exchange crypto for artwork as well as music. So there's lots of different use cases that this can be used for. So what are some popular decentralized applications? We have digital currencies, PYUSD, everybody's favorite meme coin, Doge. We have non-fungible tokens. Everybody knows about the Bored Apes and the artwork. One of the use cases for NFTs that I'm really kind of hoping that we see start to take off in the next couple of years are loyalty programs, tickets, maybe property ownership. There's a lot of really interesting things that you could do with loyalty programs, with NFTs, as well as concert tickets and giving additional rewards and ownership to people. There's decentralized identity. WorldCoin is an example of this. Decentralized finance, such as Uniswap, record tracking, TRM Labs. We also have data storage, which is IPFS and Filecoin. So we're going to start to talk a little bit about stablecoins. We'll talk a little bit about how we see the space. PYUSD is a foundation for the next generation of payments. and shaping the next generation of payments together. So let me see if I can actually get the clicker to work. We'll just say that the traditional set of payments is painful. Payments take days to settle. When we look at ACH, it can be up to 96 hours for a payment to settle. You have excessive intermediary fees when you're doing a wire transfer globally. This can cost up to $100 per wire transfer, very expensive. You require bank accounts. Not everybody has access to a bank account, and if you don't have that, you don't have access to a lot of financial instruments, loans, the ability to get credit, and so crypto really gives you the ability to access financial industry without that. And you're also stuck with banking hours, which is 9 to 5, and banks have a lot of holidays. And if you're not in a city with a lot of banks, you don't have a lot of choices for banking. So it's really interesting that the head of the Federal Reserve said the only thing useful that banks have created in the last 20 years is the ATM. So we're going to take a little bit deeper look at some financial innovation that underpins credit, or the financial industry. So in 1872, the first wire transfer was completed. This is about 150 years ago. 80 years later, the first credit card was created by a diners club in 1950. This is not like a modern credit card that we see today, but it's the first instance of people being able to use credit to purchase dinners. In 1972, a full 100 years after the wire, the first ACH network goes live, and it really hasn't changed much in the past 50 years. 5 years later, cross-border correspondent banking was done with the SWIFT network. And so we're looking at 50-year-old technologies that are underpinning all of the payments systems today. So in 150 years, not a lot of innovation in the financial sector. So we think it's time for the next generation of payments. Today's system is run on banks with interbank messaging systems, and we really feel that the next generation of payments is going to be done on peer-to-peer networks without a central intermediary. So I'm going to talk to you guys a little bit about stablecoins. A stablecoin is usually pegged to a fiat currency, a commodity, or a financial instrument. There's also been a concept of algorithmic stablecoins. They've fallen out of popularity a little bit with the collapse of Terra USD. They can depeg, so nobody really talks about them anymore. But they were cool for a little bit. Crypto's full of its fads. So we think the next generation of payments is going to be fast. We think it's going to be interoperable. We think it'll be inclusive, and we think it'll be 24/7. Want to tell everybody a little bit about PYUSD. It's a stable coin that's pegged 1-to-1 to the US dollar. 1 PYUSD equal to $1, and 20 PYUSD is equal to $20. There's some really important properties of PYUSD. It's 100% backed by USD reserves. The money is kept in bankruptcy remote accounts, so if something was to ever happen, the money of the customers is safe. It's low cost and 24/7, interoperable and fast. It's programmable and multi-chain, currently available on Ethereum and Solana, and we're looking at more chains. It is regulated by the New York DFS. You have the ability to buy, redeem, and transfer on PayPal and Venmo, and it has AML monitoring transactions. I'm going to hand this off to Sam, and he's going to tell you a little bit about how stablecoins can be used in payments.
Thanks, Ian. Now that we've learned a little bit more about the blockchain, what it is, L1s, L2s, I really want to dive deeper into and expand on what Ian brought up and what we see as the most exciting business application of the blockchain today, stablecoins. As we've discussed, stablecoins have the best of both worlds. As they're running on the blockchain, they've got the speed, cost effectiveness, and programmability of the blockchain, but they have the stability of the underlying fiat. We can see today already the benefits that the market sees in stablecoins just from the market cap growth. On the chart in front of you, you can see from 2020 up until the beginning of the year, the growth has really been up and to the right, and that's despite a broader crypto correction in 2022. Today, we've got over $230 billion worth of stablecoins in circulation. And in a 24-hour period, 123 billion of that trades hands. There's some really big growth, and we'll continue to see that growth. What I'd like to do is look at this in a slightly different way and break out stablecoins versus other crypto coins across the regions. So what we can see here is stablecoins versus Bitcoin, volume by USD value. In green, we have stablecoins. In orange, we have Bitcoins. And in gray, we have all other cryptocurrencies. There's a few areas of interest here. We see big stablecoin usage in areas where underlying fiat currencies are volatile, such as in Latin America, MENA, and Africa. But what's also really interesting is in areas such as North America and Western Europe, where traditionally cryptocurrencies have been seen as an investment vehicle. We're still seeing a third of transactions taking place in stablecoins, and we only see that growing. This was information for us from 23 and 24, and when we get the refresh, I'm sure we'll see that green growing even further. Now we talked about usage, I want to go back and really stress the benefits of stablecoins. So today, businesses have to deal with slow, expensive, and when it comes to cross-border, difficult payment rails. Stablecoins really solve all of this. So stressing on the points that we brought up before, payments done in stablecoins are final. They're done in real time, and there's no chargebacks. They're available 24/7, and gas fees are really transparent and upfront. Transactions can occur on the blockchain, so it's really, really auditable. You can see what's occurred and who transactions have been done between. It's programmable, a great example with the smart contracts earlier. And most importantly, we see is it works across platforms, wallets, and rails. To bring up our favorite stablecoin, PYUSD, we allow customers to interact with PYUSD on our platforms, PayPal and Venmo. But you can use that cryptocurrency, that stablecoin, on wallets that you pick. And also, we're already running on Ethereum and Solana, and I'm sure there's more to come in the future. So let's just do a quick comparison of stablecoins versus the other traditional rails that we see businesses use today. Stablecoins can cost fractions of a penny, depending on the network that you're running on, and they can take seconds to minutes, which is really good. ACH traditionally has been cheap, but a little bit slower, requiring business days. Checks are expensive and slow, and then debit cards are expensive, but a little bit quicker. In every one of these categories, stablecoins wins. Let me give you some real-world examples of how we're using stablecoins internally at PayPal. On the left, we have Zoom use cases, and on the right, we have our B2B use cases. So for those of you that don't know, Zoom is an international remittance service that we offer at PayPal. It allows our customers to transfer money around the world very, very quickly. How we do that is basically we pre-fund with partners around the world to do the last mile of a transaction. Traditionally, we've had to forecast how much we're going to spend. We've had to pre-fund these partners well in advance just because of the processing times of moving fiat. And we've had to be pretty good at guessing how much we're going to spend. Stablecoins for us has solved all of this. We can make transfers to our partners in seconds at incredibly low cost to us. And if we do see a spike in customers making transactions, we can simply add funds to those accounts. So it gets rid of all that concern and forecasting needs. On the customer side, we've actually given customers the benefit of being able to use PYUSD to pay for their transactions. So today, a customer that has PYUSD can pay for their Zoom transaction. We will take that PYUSD, we will convert it to fiat, and we'll send that fiat out to their recipient as normal. What we've also done is passed on the cost benefits of that. So a customer doing a transaction using PYUSD won't be charged any fees for doing so. On the business side, we've actually partnered with SAP to create the SAP Digital Currency Hub. This allows businesses to invoice in PYUSD and be paid PYUSD for their invoices. And we've done this a few times with our partners on here on this board. Google and EY have invoiced us, and we've paid that invoice in PYUSD. But it's not only us that are using it. I want to give a couple of examples now. I've got a couple of videos from SMBs that work with PayPal that see the benefits of stablecoins and PYUSD. I'm going to start with a US seller of fig tree pots.
Well, I'm Renee Giardino. I am the face, hand, CEO, everything behind Fig Tree Pots, which is a small ceramics business in Austin, Texas. I have the customers who meet me, see my products in shops. I have my customers who I meet at markets, and then I have my online customer group. Right now, I get my clay sourced from other small businesses. So what goes out usually is what just came in. And this has been one of the biggest hindrances of getting things from overseas is the banks, the issues with the banks and getting their payments in and different timetables and stuff. And they're not going to ship things until they're all settled. The delay that can happen when you are trying to pay and get your supplies can be catastrophic. So we're talking about 3 to 5%. For example, our margins as a small business are wafer thin. So, if you're talking about the difference between even a couple percentages, that adds up so much over time because we're talking about, even a couple $100 makes a big difference when you're talking about supplies and things like that, especially for an artist who is, kind of doing that in and out, just even that little margin, game changer. For us as a small businesses to have a little bit more control over that, it would help us budget better, it'd help us be able to report better. It allows us to do more markets, it allows us to make more, to sell more. It would help us to be able to scale better and to say, oh, I can afford this. Because even with the transaction fee, I had to turn down a really significant wholesale from Dubai because we could not figure out how would they pay me. Most of my sales I've kept it nationally. Even though there is a desire, I have a lot of desire for my products to be sold internationally. If I had that path, that would open up a lot of opportunities. Fig Tree Pots for PayUSD is this to simplify the process. The fact that it is timely, it's the fact that the fees are low, and I think it gives me room for growth. That's what really excites me is a door open to more international sales, a door open to scaling my business to a place where I've really hit a ceiling. And I've tried to be as creative as I can, and I can't do it, so I've had to say no. And so to be able to say yes, where I've said no before, is exciting for me.
Fantastic. Yeah, you can see our SMBs really calling out some of the points that we've been talking about. It's fast, it's cost effective, and you can see there that she really wanted to expand international. And this is what stablecoins enables, particularly in our next use case as well, with a coffee company out in New York.
Hi, my name is Nikisha Bailey. I am CEO of Win-Win Coffee. I always had a passion for connecting people, for connecting dots, for building community. So whether that was through music or my other love of coffee, I was going to do that.
Hi everyone, I'm Matthew Nam. I'm the head of operations at Win-Win Coffee. We are an importer and manufacturer of coffees from countries of the African diaspora.
The stark reality that we found out was that 80% of the world's farmers live below the poverty line. Why is that when coffee is the second highest traded commodity in the world? It's a $500 billion industry. By the time it gets to the Western market, it's marked up to 2,100%, while the farmer sees a fraction of that cost.
Oftentimes, the people who make our food go to bed hungry. And one of the issues that we see with that is they are excluded from the supply chain due to lack of infrastructure. Our mission at Win-Win is to digitally map producers and connect them to global markets. When you talk about commodities trading, when you talk about buying from an international producer, how can you create more stable interactions by removing all of this friction? So that's another thing that can add more friction, especially when you're building a new relationship and you're trying to build trust. Has the money settled, right? Time is definitely a big factor when it comes to trading agricultural commodities. So the speed of stablecoin, the speed of which you can transact definitely is a big part of a successful relationship. A lot of these producers are unbanked. It's much easier for people to get access to the internet versus having the infrastructure of roads and cars to get to some of these banks. So currency volatility is a big thing, and this is a reason why they do want to get paid in US dollar or stronger currency. This level of currency stability, they're able to plan for the future and they're able to take better pricing in. So it's a big ripple effect. It's leaps and bounds when you think of the transformative power that a stablecoin, which in and of its name creates stability for these traditionally exploited communities. You can truly connect and strengthen these communities through commerce.
I think the future for stablecoin and international trade could really be limitless. From our experience in the global supply chain and in trade, it's a very archaic process. For industries that move so much volume of money and so much product, you would think it would move a lot quicker and be more efficient. And I think that stablecoin could really kick open the door for people being able to transact much more quickly. Again, I think transparency is key. So, knowing that there is some safety behind the trade that you're doing and knowing that it's reliable and that you can actually trust what's on the other side because it is a stablecoin.
When Nikisha and I started this business, we wanted to make sure that we were making better margins.
We also, are thinking about fees on our side as well too. So racking up fees through credit card transactions or wire transactions. Just how are we mitigating that cost by any means necessary?
We love PYUSD at Win-Win Coffee because it allows us to be closer to our producers. It allows us to be much closer to our farmers. As a result of that, again, we can pay our producers more, and we are able to provide our customers competitively priced products. That's a win-win for us at Win-Win Coffee.
Perfect. Thank you for listening.
Any questions?
So, in the remittance use case, you're still bound by whatever the USD to local currency conversion rate is, right?
So the question for everyone to hear was if in the international remittance use case, if we're still bound by the exchange rate between USD and whatever the fiat currency is. The answer is yes. There still has to be an exchange between the two. There's a couple of things that we see happening. In areas where countries want to or customers want to, they're happy to receive the PYUSD instead of their domestic currency. So in the example there with Win-Win Coffee, what you might see is suppliers of coffee beans that need to purchase machinery, and that machinery is priced in dollars. They want to receive that. I'm not saying that's particular for them, but they're generally what we're seeing as well.
They can always hold it, right? The PYUSD, they don't have to exchange it like immediately.
No. So because PYUSD is on the blockchain, you don't have to use PayPal and Venmo to even hold it. You can use external wallets to hold that PYUSD, which is what's great about it. Cool.
Yeah. So on the chargebacks, right? Like, so I think you're saying like chargebacks are not allowed or possible with PYUSD, right? Because that's like different from the normal PayPal thing, where if like the customer complains that they didn't get what they expected, then PayPal will revert the transaction, but that doesn't happen. Is that correct, or I understand it?
So the question is about chargebacks and what can a customer do. A lot of that is actually done through the banking and debit and credit card and different buyer protections. The blockchain by itself has finality with a transaction, and there's nothing in the blockchain itself that allows for the reversal of a transaction. So it's either going to come up to the merchant to be able to send the money back, or adding in buyer protections into the thing so that there's a way of redeeming people's giving people their money back if the merchant doesn't actually fulfill the transaction. So
Yeah, my issue is more from like the merchant side, because like when you ship things internationally and you incur all those costs, and then the customer halfway across the world says like, well, I didn't receive the right thing, or I don't like it, or whatever, right? Like you're out of your $1,000 of shipping, and you need to get your product back and all these kind of things. And basically, so the company I work for, like they basically said like, well, we don't use PayPal, sorry. We just use wire transfer because we don't want to have to deal with these kind of things, right? So I'm wondering whether or not this would solve that particular problem. So basically, not having PayPal sit in the middle and say like, well, we are going to, be the arbiter of like whether or not your product, is correct or whatever.
it would probably depend on what are the protections that a merchant would want to be able to extend and offer, as well as PayPal for those payment rails. There's just certain regulations around debit cards and credit cards that around chargebacks. And so there aren't regulations, at least right now, around if you're using crypto purchases and what financial institutions need to be able to do. So we'll have to see how the industry develops, and some things may be adopted just to get more consumer adoption. So we'll see where that goes and how that continues to evolve.
Question at the back?
Yes, is PYUSD an immediate payment option for checkout, or can it be?
The question was, is PYUSD an immediate checkout option for PayPal, or can it be? So today we do allow customers to use PYUSD to make transactions or pay for transactions at checkout. The journey today for a customer is if they have PYUSD in their wallet, then they can use that PYUSD to fund the transaction. We will essentially sell that PYUSD to fiat there and then within the journey and provide the fiat to the merchant. So they're still getting fiat, and the customer is able to use PYUSD in their wallet. As we're seeing uptick in this grow, we are seeing some exciting asks in that space. I don't think I can say what they are, but like, watch this space. There's more and more stuff growing here. So this is only going to get better.
And I would just like to add that for kind of PayPal checkout, you can also, if you have Bitcoin, Litecoin, Bitcoin Cash, or Ethereum in your wallet, you can use that to check out with, I think, close to all of our merchants at checkout. So just kind of scroll down and look for those options during checkout to be able to buy.
Does that spot rate change at checkout if it's because of the variance in?
Well, we get you the question was, is there a spot change in variance? So we just get whatever the quote is at that particular time, is just as if you were going to sell it in your wallet and use the cash to buy in your balance. So you will just get whatever the current market rate quote is to sell. I guess.
You mentioned the smart contracts and that type of functionality. Are there any plans to introduce like a PayPal escrow smart contract? So if I, as the coffee producer, are going to send you $500,000 of PYUSD, I can register with the escrow contract details, and the other side knows, hey, I'm going to provide the shipping documentation, and the escrow service is going to sign off before the release, because that's kind of how large transactions internationally all go through escrow services, where someone in the middle's deciding I'm going to be the arbiter of it.
Yeah.
To scale that up. I mean, it's the only way I see chargeback protection actually happening is some form of, because that's what PayPal on your credit card is. You're saying PayPal's the escrow company, and they're going to arbitrate the dispute, and so that's why customers have confidence.
If I'm summarizing the question correctly for everyone else, is PayPal going to offer an escrow service and offer smart contract capability? At the moment, not on our roadmap. Short near-term roadmap. It is something that we've discussed. There's a lot of excitement internally between our engineers, our PMs, particularly our crypto native PMs, on utilizing stablecoins and the blockchain to its full potential. Obviously, roadmap is longer than what we can actually build, but I wouldn't be surprised if something like this did eventually come up, but nothing I can confirmly say at the moment.
I think the gentleman in the back was, are you?
Same thing about the smart contract.
Okay.
If there's a smart contract, that would trigger, the execution of the blockchain, right? Based on network conditions being satisfied, right? So, I was thinking that would be something that we can.
Just hearing you guys talk about it is great, because then it gives us another, there's demand.
Yeah.
It's okay.
We got it.
I have another question. Since we're building a app and our users are more like Gen Z in Latin America, so I just probably ask a very specific question, is there any on-ramp, off-ramp solution or APIs that PayPal can provide for the PYUSD, integrate with our application?
Yep, the question is around a specific application if we have off-ramp and on-ramp capability. The answer is we do. We partner with particular people, and we have some great documentation actually that I think we can share.
Yeah.
And we'll share with you offline after the meeting. But I think there's some pretty cool stuff that you can play with already.
And we use an aggregator named Mel to be able to facilitate some integrations as well. So yeah, I can definitely share some that information with that after. So.
I don't want this side of the room to feel left out. Sorry, but I've just been looking at this one. So.
The bright lights kill me from being able to.
Yeah, please go ahead.
So with your MCP server, can you now invoice in PUSD for invoices, settlements, and transfers?
Yeah, so the question is about invoicing in PYUSD. So yeah, we did a...
MCP server. With agents, essentially.
We have not built that capability yet. It's something that we can look at. PayPal is continuing to invest in its kind of accounts payable, account receivable product line, and we expect as that continues to be developed, we will integrate PYUSD into those products.
Yeah, I think I have two questions possibly. So if you want to move, if I want to pay this gentleman here, or he wants to pay me, and we are on your system, we don't need this, right? Because you are managing it, you're taking care of its security and everything. So the use of this is to interoperability between different systems of different institutions, I suppose, internationally, right? Okay, so yes, so question number one. Question number two is, PayPal, this is your stablecoin.
Yes, this is.
Okay, by PayPal.
This is a PayPal stablecoin.
Okay. And I get it right, it's like the gold standard, right? So you're like shedding away $1 per each PYUSD you emit. Cool. So you're like one of the old central banks with the gold standard. And this thing is created on some blockchain, and you said you created on two different blockchains, Solana and
Ethereum.
Is that correct?
Correct.
So two questions here. If you're creating it, so somebody's paying for the energy of it and taking care of this. Question number one, if this thing dies with the blockchain, so if Ethereum dies or Solana dies, the PYUSD that were transferred to the coffee maker in Guinea, it dies. The thing dies, the dollar burns, it disappears.
So the question is like, I want to make sure I'm understanding the question properly here. So the question is if Solana was to go away as a network, what would happen to the PYUSD that would be there?
Yeah, the one, it's connected with the fact that you're basically emitting money like one of the old central banks. And why would you do it?
So if I'm understanding the question, it's how do you make money off of this, and are you emitting money? So we're not really emitting money. What we're doing is putting $1 as a stable coin on a blockchain. And there's $1 sitting in a bank account, which is bankruptcy remote, which means, if something ever were to happen to PayPal or Paxos, you'd be able to say, this is how much PYUSD I have, and then be able to go and get that back from that bank account. So even if something were to happen to the Solana network and it was to implode, you could kind of say, this is how much PYUSD I have on this network, and you'd be able to go claim that back and get that back out of the bank and get somebody to convert that to Ethereum or some other network. So because it is backed one-to-one and there is $1 in the bank for every PYUSD that is on one of these networks, there will always be fiat available for you to go back and convert back to your fiat. So we're not printing money like a central bank, we're just having a digital representation of $1 on these different blockchain networks.
I don't want to monopolize this.
Okay. There was a question right back there. I wasn't able to hear you from back there, so I'm coming up here. Whoops, as I kick over the light.
I want to ask more about the Zoom treasury management business test, right? For example, if you run this test, right, the US-based person and want to run this money into the emerging market, right? Either the individual person, they have the wallet and receive the paper USD. There is other person that are not very familiar that they still use a traditional last mail, right? How do you work with your local partner to accept the paper USD?
Okay, so the question is how do we work with local partners or people in different geographies from remittances who are not familiar with digital currencies or PYUSD? I'll hand that back over to Sam because he actually works on that product a lot as a product person, but I just wanted to make sure that I could hear the question and repeat it properly. So
yeah, perfect. Let me expand on a few elements of it then. So traditionally, Zoom has been like you pay you as a customer that wants to send money abroad to someone. You pay in your domestic currency, for us, say USD. We would take that USD and at the other end pay out whatever fiat that you wanted in various forms to the recipient, whether that's cash delivery, pick up at a local store, or transfer to their bank account, or top up a debit card, whatever. With paying with PYUSD, we're still allowing the customer who wants to make the transaction to do the same thing. Rather than take the money from their bank account or from a debit or credit card, we're just allowing them to pay us in PYUSD. We're then going to accept that PYUSD because we do. And then at the other end, that recipient will still get whatever fiat they were going to get in whatever format they wanted at the other end. So the two things aren't connected, us being paid and us paying out. So that means that the recipient doesn't need to learn stablecoins or blockchain or have a wallet address, which is great for both ends. In terms of us working with partners and them accepting stablecoins, that's like any business relationship. We need to work with individual partners and they need to say if they're willing to accept PYUSD as a stablecoin. What we're finding is a lot of our partners are, obviously we've only just started and we had a couple of examples up there, but they see the benefits of it as much as we do. Like, it's very stressful, obviously, when we have a peak. Around Mother's Day, we see a lot of people from the US transferring money abroad. We know that we have to pre-fund these accounts with a lot of money. So being able to use PYUSD and really pre-fund, like on the fly, kind of gets rid of the stress for everyone. So hopefully that answered the question. One, consumer can pay in PYUSD. It doesn't impact how the recipient receives their funds at the other end. And then two, we work with individual partners to say we would like to pay you in PYUSD, and they have to accept, yep, we would like to be paid in PYUSD.
Is Paxos the only custodian you have, or
Paxos, so the question is around our custodian at PayPal. We partner with Paxos, and they're our custodian.
So kind of going back to the question about backed money, FDIC insures for $250,000, but it sounds like if you're on PYUSD, really every dollar is backed. So does the same FDIC $250,000 apply at the bank level?
So the question is around FDIC insurance on stablecoins and PYUSD. So we're not a bank, it's not a security. which means that FDIC insurance does not apply. What PayPal is, particularly with our stablecoins, is we're New York DFS regulated, and as Ian has stressed, like every dollar that you give us is put into a separate account that's bankruptcy protected in incredibly low risk assets, such as U.S. Treasuries.
And so I'm going to add a little bit to Sam's answer there a little bit. So this isn't your deposit into a bank account. So there's two types of things that you could be worried about, right? Where we're putting the money, that financial institution could collapse, or the PayPal or Paxos could collapse, and then you wouldn't be able to get access to your money. So the New York DFS makes sure that we're putting the funds into a financial institution that's properly stress tested, low risk of having this collapse. The other aspect of it is it's a bankruptcy remote account, so that if something were to happen to either us or Paxos, those funds cannot be tied to the assets in the bankruptcy where creditors can go after. So those are the two kinds of protections that we have on the funds for PYUSD, but it's not that I'm going to my bank and I'm putting some money in and Fidelity is going to collapse and the government is backing my individual deposit, because this is more of what they would call like an omnibus account where everybody's funds are commingled together.
Sounds even better than FDIC insurance.
Hopefully.
No comment.
Yeah. I think we're actually out of time now, so if you have questions, maybe you can find us after. Really appreciate everybody coming to the talk and listening and all the great questions that we got. So thank you guys very much.
Thanks, everyone.